So a lot of people might look at these charts right here and say, now is the time to get into cryptocurrency. But is it true or not? Today we're going to cover everything that you need to know what happened today. And I'm going to break it down on why you shouldn't all in on cryptocurrency now. Another day, another bank in major trouble. This time it's going to happen to Credit Suisse as it sheds nearly 25%. Key backer says no more money. Now, Credit Suisse lost almost a quarter of its value on Wednesday, dropping to a new record low after its largest investor said it could not provide the Swiss bank with more financial assistance. The Saudi lender acquired a stake of almost 10% last year after taking part in Credit Suisse's capital raising. And as Credit Suisse dropped by as much as 24%, reignited some of the jitters among investors about the resilience of the global banking system after the collapse of Silicon Valley Bank. Now on Tuesday, Credit Suisse published its annual report for 2022 saying the bank had identified material weaknesses in controls over financial reporting and not yet stemmed customer outflows. Switzerland's second biggest bank is seeking to recover from a string of scandals that have undermined the confidence of investors and clients. Customer outflows in the fourth quarter rose to more than 110 billion Swiss francs. All right. Now, another bank run might be happening, and this time it's going to happen to one of the largest banks in the entire world. All right. So this is Credit Suisse's stock today. I apologize. All right. It's shed almost 20%. Sorry, 20% already. All right, because the key backers said, I'm not gonna invest any more money into Credit Suisse. I mean, logically speaking, if it goes down, what's gonna happen to me, right? And this is the reason why you shouldn't invest in cryptocurrencies now, because as the banks are gonna go down, so is customers' capital and your capital as well. And how is it correlated? I'm gonna get to it in a minute. Now, another reason why. California Governor Gavin Newsom lobbied to White House and Treasury on the bailout of Silicon Valley Bank without disclosing that his private wineries have reportedly been the bank's clients, and he may have even had a personal account at the bank per The Intercept. Now, why does this matter? It's because the governments are always going to bail out failing banks. So they're going to print out more money, issue more bonds, just so the banks can survive and then provide its services to customers as well. So as the dollar loses its value due to infinite printing, what do you think is gonna happen, right? It's gonna lose value. People are gonna go into Bitcoin and then dump it, all right? They're gonna short the Dixie, they're gonna short Bitcoin, and all those stuff are gonna happen, okay? Now, this is just my own theory. It might not make sense to you, but it's just from me. And I'm not gonna lie, I've been right, because I've made a video on why you shouldn't all in on cryptocurrency, and so far it is playing the way that I expected it to be. Now, here is the reason why you need the banks to actually stay afloat and not go down and not being bailed out. All right. Morgan Stanley notes that Bitcoin was designed as a way for people to hold value in a private digital wallet without a need for an intermediary to store value for them or to enable transactions. Bitcoin isn't isolated from the traditional banking system. Okay, now if the banks fall, the cryptocurrency will fall as well. Now you might ask me, but if that's the case, then bailout should be good. But you need to know, bailout happens because they're gonna print more money and the US dollar is gonna lose value. All right, now more banks are gonna happen and more bank runs are gonna happen. So what are they gonna do? Print more money? That doesn't make any sense, right? So as its price is supported by USD bank liquidity, making it trade as a speculative assets rather than the currency. While the Bitcoin network can operate without banks, BTC's price and therefore its purchasing power continues to be influenced by central bank policy, and it needs banks to facilitate flows into the cryptocurrency market. Now, Bitcoin's reaction to the negative net news flow changed in recent days, rising almost 20% on Monday after the Fed and the Treasury said they will support the banking sector. However, last week at the height of uncertainty, it fell along with risk assets and bank stocks. Price action indicated that a rally earlier in the week was driven by a small number of market participants and most likely helped by a short squeeze. All right. Now, for those who don't understand what is short squeeze, shorting is a way of betting that the price of an asset will decline. An investor borrows a security and sells it in a hope that the price will drop. Then they repurchase the security and return it to the lender, pocketing the difference in price. A short squeeze occurs when an asset gains in price and investors' position shorts are forced to cover their positions for a loss. All right. Now, the Bitcoin pump or the cryptocurrency pump in recent days might be a short squeeze. It's not the reason why people are flocking to cryptocurrency because, hey, we don't trust banks, let's get into cryptocurrency. No, it's because of short squeeze. All right. More pain has to be expected, and that is the reason why I am telling you guys to not all in cryptocurrency. DCA all the way. BlackRock CEO, more bank seizures could occur going forward as inflations to persist. The CEO, Lawrence Fink, warned that the regional banking sector in the US continues to be at risk after the collapse of Silicon Valley Bank. In fact, he also went on to opine that more bank seizures could take place going forward. It was not clear if the banking crisis triggered by rising interest rates would claim more victims, but mentioned that it is inevitable that some banks will pull back on lending going forward to refine their balance sheets. That, in turn, will lead bank clients to turn more to capital markets for their financing in the face of asset liability mismatches that affected Silicon Valley Bank and other institutions. Nevertheless, he acknowledged that quick regulatory action helped dodge away a wider crisis. All right. He also said the regional banking crisis, the financial industry could have something called liquidity mismatches. Low rates have notably driven some asset owners to raise their exposure to higher yielding investments that are fairly less liquid or not easy to sell. So everything still correlates to the traditional banking sector because cryptocurrency is still not deemed as a safe investment to go forward to hedge against inflation. And that concludes my reason why you shouldn't be all inning to cryptocurrency now, DCA, and let's just monitor the situation going forward, and let's hope that no more bank runs are going to happen, but I'm pretty sure it's going to happen. All right. With that being said, let me know what you guys think in the comment section, like, subscribe, and I'm going to see you guys in the next video. Peace.